Hello everybody. So this video is entitled MSTR stock. Should we blame or should we praise Michael Saylor? Is Saylor to blame or is Saylor to praise? Because of course, because of the price of strategy and because of the price of Bitcoin, Saylor has been blamed a lot these past 2 weeks, and I think he's got nothing to do with what is happening to the Bitcoin market and to the macro situation right now. But the maxi influencers are coming for MSTR stock and they're doing some damage. It's undeniable. If you look at Bitcoin, past 5 days, Bitcoin has entered a stablecoin mode. We're about between 61 and 63, and we're probably going to sit there for a long while until we slowly grind back up. At least it's historically what has happened with Bitcoin. Elevator down, stairs back up. But that's not true for strategy. Strategy is down 7%. And normally over a 5-day period, strategy should be up about 1.5% over 5 days. Now, not down 7%. And of course, I attribute this delta in performance, I attribute to the bears, and the bears being louder and louder and madder at strategy and at Saylor. So let's go and briefly talk about the bear argument and what the bears say. The bears keep ignoring the fact that the preferreds are perpetual. They keep treating preferred stock as debt. They forget the perpetual part of the debt. The perpetual part of the debt means that that debt does not need to be repaid. That debt is much closer to equity. And since it is much closer to equity, it makes sense to use enterprise value and to add that debt to the market cap and not entirely ignore it from the market cap. You see, enterprise value, when you add some debt to enterprise, when you add debt to market cap, of course that looks like you're making a prettier picture. That looks like you're making a prettier mNAV because you're increasing the value of the enterprise value. You're showing a greater value between market cap and debt, both together. You're showing a greater value, so you're showing a greater mNAV. But the bears say that the debt part needs to be repaid. That's the problem. That's the crux of the disagreement here. Does the debt part need to be repaid? The answer to that is no. No, it doesn't. Why? Because it's perpetual debt. It's perpetual debt. So another way to look about this, and I don't mean to make this confusing, another way to look at this is that you have MSTR, which is equity without a dividend, and then you have stretch, which is equity with an ever-changing dividend. And of course, as the rates inevitably trend towards zero in the coming years, in the coming decade, the stretch yield will also very much be lowered, and the stretch yield could look something as low as, say, an Apple stock, like a 3% or 4% yield. And then it will be very, very much immaterial. We just happen to be in a very tough macro situation. Bitcoin is failing, Bitcoin is dropping, and because of that, strategy is hurting, and strategy is getting the brunt of the criticism. But the same is true for the converts. What are the odds that the converts will be paid back in cash? Right? Thus, if we say we pay back in cash, then we should use market cap, right? Because that's not permanent part of a capital structure. Are the converts part of a capital structure permanently? And the answer to that question is obviously yes, because the converts, if you know Saylor, the intention has never been to pay off the converts with cash. The intention has always been to pay off the converts with future MSTR dilution, which dilution there will be if the price of Bitcoin recovers. Now, it's true that if you believe the price of Bitcoin is staying at 60,000 for the next 4 years, then using this mNAV doesn't look really as good. But if you believe the price of Bitcoin is going up forever, then using this mNAV makes perfect sense, because in my view, the perpetual preferred stock, most of it now is stretch. Most of it is going to be stretch. That stock is going to see a decrease in its dividend over time as the interest rates inevitably tend to zero, because Tina, there is no alternative, there is no other way. We just happen to be in the most awful macro ever for inflation and for rate cuts. And because of that, Bitcoin's not doing well. And if Bitcoin's not doing well, strategy is doing even worse. But what is not working right now with strategy? What's the problem with strategy right now? What is to blame? Bitcoin performance is to blame. That is the one thing to blame. It's the risk that we all agreed to when we started buying Bitcoin proxies. When you buy Bitcoin proxy, you agree that if Bitcoin fails, then your Bitcoin proxy is going to fail. That is the ultimate risk. This is the risk, by the way, that all maxis also take, Bitcoin failing. So strategy stock is not doing well because Bitcoin is not doing well. But then why is Bitcoin not doing well? Because this market has continued to be absolutely crazy. And we're in, well, I mean, honestly, we're in year 6 of craziness. Yeah, I mean, it's been relentless since the early events of 2020. The macro dents, the macro kicks at Mr. Market have been intense since the event of 2020. And we've accelerated the bad macro the past 6 to 7 months. So we had the 10-10 liquidation, which was a technical event, triggered on chain with an issue of oracles. Right? Then we had government shutdown, leading to liquidity drying up, banks running out of liquidity because the government's missing 4 paychecks not hitting the banks in the US. Then we had the most stubborn fair share in history with relentlessly bearish press conferences, cumulative, month after month. That was hurting the market a lot. And then we had, out of the blue, another dark gray / black swan, which was a Middle East situation, and the oil prices going to the moon, and the media having a field day talking and covering the Middle East situation. And then we've had AI being a competing investment for Bitcoin. People who are likely to buy Bitcoin are also the people who are likely to buy Nvidia stock or Micron stock. And then right now we have SpaceX. People who buy SpaceX are the same people who are likely to be interested in Bitcoin. So we have a lot of competition for high-risk capital. We have very little liquidity. We have rate hikes now, and now to top it all off, we have rate hike fears, which in the U.S. now, the CME Fed Watch tool telling us rate hike in December of this year, and in Europe they're there already. In Europe, they seem to believe that raising interest rates in Europe is going to make the oil prices go down, right? Because central banks control the price of oil. Absolutely, right? Europe, the ECB is like, let's crash our economy so that there is less demand for oil, so that the price of oil goes down. This is literally the outdated logic that these central bankers use. And I really hope Wash does not turn out into a Powell 2.0. As far as I'm concerned, he has the benefit of the doubt. Full benefit of the doubt. I'm going in with an open mind next week in his conference. But in my view, he needs to do rate cuts. You need to do rate cuts. So many companies, states, governments, cities, households are accumulating so much debt. The longer we stay without rate cuts, the closer we go towards a depression, towards a capitulation type of event, towards a domino effect type of event. There is too much debt in the system. There is much too much debt in the system. Liquidity needs to come back in. Otherwise, some big kahunas are going to go out of business, right? Credit Suisse is going to look cute if we don't actually drop the rates. The rates need to drop. And they know that. That is my take. My take is that they know that. And we'll see that with the new chair. We know the other chair had a political agenda. The new chair shouldn't. Anyways, if somebody criticizes someone's idea, what's a dead giveaway that they don't have a point? A dead giveaway that they don't have a point is when you attack someone's character, someone's style, the way they speak. You may have seen some bears attacking Michael Saylor, saying, oh, he speaks like a word salad. Have you heard that? Attacking someone's look is also a classic way to see that there's no substance to the argument, so you're attacking the looks. A lot of the maxis have resorted to attacking Saylor's style, character, the way he speaks, or the way he dresses with orange ties. When you start attacking the character and instead of attacking the ideas, it's a bad sign. And I don't like that at all. And of course, I realize how social media works. Right? We have a lot of political figures where they attack the style that they speak. Right? I try to make a point to not attack someone's style. So the style is the style. What matters is the actions. What matters is the actions of Saylor, not the way he speaks. So when people attack his style and the way he speaks, I find this entirely wrong. And to me, it's a dead giveaway that you don't have a point. That's point number one. Point number two is, this is the Maxis, talking about the Maxis, saying that people should abandon the dollar and move to cold storage. This is the whole point for Saylor's pivot to digital credit. He said, I can explain digital credit in 30 seconds in the elevator. I can't explain Bitcoin in 30 seconds in an elevator pitch. He can't do that. And he said, believe me, I've tried. And he's tried for 4 years. That's why he made the switch. Not everyone will feel comfortable going with cold storage Bitcoin. In fact, a lot of the older Bitcoiners have moved to Bitcoin ETFs because they're not comfortable with cold storage Bitcoin. Not everyone will want to do that. Also, I've noticed some of the anti-Saylor takes are taking a very hard stance against fiat. And there's really two ways to look at fiat. You have kind of like a prepper vibe where you want fiat to collapse and you want it to collapse fast. And that's not me. I don't want it to collapse fast. I think it's much better for society if we have a slow bleed to fiat. A slow bleed to fiat is much better to society. You're keeping the institutions in place. Everybody gets getting ready for a soft transition to fiat. And yeah, people slowly sell off some bonds and maybe they buy stretch a little bit. But they start with 3% and then 5% and then 10%. Not everything all at once, not an earthquake. Because when you have an earthquake, that's when you get enormous institutional risk, political risk, geopolitical risks. And frankly, the Bitcoiners, the Maxis who claim to be so educated should perhaps read about what happens when you have a quick collapse of fiat. I'm thinking about way more Germany. A quick collapse of fiat is not a good thing. If anything, we want a slow collapse of fiat, like it has been doing for the past 90 years, perhaps a little faster, right? My favorite example on this channel, a Sears house in 1920 used to cost $2,000 for a nice family home. Today, a nice family home is $500,000. We've lost 99% of the value in 100 years. It happened smoothly. Very much smoothly. So in 100 years, in 2126, I don't want to say the price of a house then, but we should be okay with a house costing, $25 to $30 million, in 2126. But that's going to happen slowly. It's much better if it happens slowly. At least that is my take. And that's what Saylor is doing with these instruments. These instruments are setting up for a slow adoption of Bitcoin, which, by the way, we all want Bitcoin to be adopted fast, but that's not what the market is giving you. The market has told you that adoption will be slow. The market has told you that adoption will be slow. And if you look at the tension among Bitcoin influencers, it's the Ben Cohen take is like, yeah, Bitcoin's going to 1 million, but it will be 2040 when Bitcoin is at 1 million. I think the fact that Bitcoin unfortunately is at 62,000 shows you that Bitcoin adoption is going much slower than we anticipated. And it's going much slower than we anticipated because of the awful investing decade that we're being dealt with right now. The 2020s are an awful investing decade. We need to look at this fact in the mirror. The indices, the market is not an indication of how well the stock market is doing. The stock market is not doing well. It's not doing well at all. There's a handful of stocks that can explain all of the return. The stock market is not doing well under the hood. Bitcoin is not doing very well. We all wanted Bitcoin to be adopted much faster. Unfortunately, it's not happening nearly as fast because of this macro madness. Like, When will this end? Can you tell me when the Middle East situation is going to end? Is it gonna turn out like the I don't even know if we can say that on YouTube, but the other situation in Eastern Europe, the other conflict, we're in like year 4 or something. Is Iran? Yeah, I don't even know if I can say that on YouTube. Is the Middle East situation gonna last 5 years? I have no idea. There's like a count online of how many times they've said a ceasefire was coming or an agreement was coming. I think it's like 38 times or something. It's coming within the next 2 days for 38 times. So anyways, nobody knows how long that's going to take, and that's an overhang on the market, and that's why the 2020s are an awful investing decade. Very, very bad investing decade, unless, of course, you buy the indices. But if you buy the indices, you got to know that it's only a handful of stocks who have given the returns. Only a handful of stocks. Anyways, the last point that I'll make is, how high would Bitcoin be without Saylor? Would we be 40,000 right now? Back of the napkin math, maybe 30. 30 to 40 to me is what we would be without Saylor. Very obvious to me that Saylor is responsible for Bitcoin being this high. And that's where I'll conclude with this. I still have to make a big video about this. I think we need to consider a Bitcoin network yield. A Bitcoin network yield. Whenever an entity like Saylor acquire, for the sake of argument, I'm showing you with 1 million Bitcoin, because Saylor is almost at buying 1 million Bitcoin, right? 845. By the end of the year, if Saylor continues, he could have 1 million Bitcoin. If Saylor has acquired 1 million Bitcoin over the past 5 years, which will be about the case at the end of the year, I think, Saylor will have created a 4.76% yield for everybody in the network, for everybody who owns Bitcoin. The Bitcoin treasuries are, as a whole, generate a yield for the network. If you add, TradFi, traditional finance, add the Bitcoin ETF, add all of the other treasury companies, right? Add, of course, strategy, add the miners who are hodling, add, even though Coinbase is a little shy, Coinbase is hodling a little bit. Hide all the family offices, the individuals, the institutions, the government who's not selling the seized Bitcoin. You add all of this, can you easily get to a 10, maybe a 15% yield for Bitcoin for everyone? Can we account for maybe 3 million coins who are now permanently held by institutions, be them strategy, be them governments, be them sovereign funds, be them private individuals? So altogether, did we retire 3 million coins? Did we create a 15% yield for everybody? And so from that standpoint, if you look at it from that standpoint, I'm going to make a hot take. And of course, that mNAV is false. But if you were to assume an mNAV like this with a company that has no debt, from that standpoint, even diluting a little bit wouldn't be the worst thing, because you're creating a yield for Bitcoin on the back end. You're creating a yield for Bitcoin on the back end. As a whole, as an industry as a whole, you're creating a yield for Bitcoin on the back end because you're retiring the Bitcoin. So, again, maybe some new takes, maybe some hot takes here. But looks like the yield on stretch is going to have to be increased. The VWAP is going to show the need for an increase. And this is not a problem with strategy. This is a problem with macro. Yields are going up in Europe. Yields might go up in the US. Inflation's going up. Oil is not going down. And so, yeah, the yield has to be a little higher right now. There's plenty of Bitcoin on the balance sheet to sustain that yield. Unfortunately, we're just at peak fear and peak FUD. Does Saylor deserve blame or praise? I think he deserves a lot of praise. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe. Follow me on Patreon. Follow me next. Thank you for watching. And have a wonderful, wonderful day.